Welcome in. I am the Crypto Bull God, and this is all in the charts. If you appreciate the content, make sure to hit the thumbs up button, drop me a comment, subscribe to the channel. You gotta click the bell icon to know when I go live. You get those daily notifications so that you can join me for some live TA Q&A. I hope everybody had a good weekend. I hope everyone was able to do something fun and interesting and not geek out as much as I did to podcasts and YouTube videos and charts, everything crypto and financial economic related. That was my weekend in a nutshell. But I love learning, so benefits me, and hopefully it benefits everybody tuning in as well. What else? Well, I mean, not surprisingly, there wasn't a ton of price action this weekend. Today is a federal holiday, so the markets are a little bit more quiet. Equity markets are not open today. They will resume trading tomorrow. We're going to take a quick look at the S&P and the NASDAQ to see kind of how they closed out the week. We're also going to take a look at a few key Bitcoin charts, Bitcoin and crypto charts. The other thing to keep in mind is not only did we have a weekly close, we like to look at the weekly closes here on Monday, but we also had 2-week candle closes on these charts. So important to kind of assess the price action going on there. Real quick, before I feel you, WP, I am, like I said, I'm still anticipating these next 2 weeks to be very bullish, so we'll have to see how that pans out. Did anyone see the testimony by Prometheum? Prometheum, that real prominent exchange. Everybody knows Prometheum, right? We've all heard of Prometheum. Well, they're the first exchange that's been licensed as a crypto security dealer. This turdball. If anyone didn't have a moment to see the testimony from this guy, I would encourage you to go onto YouTube. It'd be very easy to find it. Prometheum, this individual's name, Aaron Kaplan. Look this up. The more you see the things that are coming out, it is going to make for an awesome documentary someday. This literally felt like it was out of an 80s movie. Not only did this individual remind me of an 80s villain, and I was trying to rack my brain on who he reminded me of, and he reminded me of, not that man, he reminded me of this man. He was an 80s villain. Okay, look at this. Now, I know that the complexion's a little different. You're telling me they don't look similar? This guy was an 80s villain, bad guy in the movie Men at Work. Very good 80s movie. If you haven't seen it, you got to watch that. That is a classic. It's like a cult classic from the 80s. Men at Work. Drop me a comment if you are familiar with the movie Men at Work from the 1980s. It has Charlie Sheen in it and Emilio Estevez. His testimony was a joke. He was reading from a script. It literally feels like he has been set up. And I don't know if you've watched any of the other videos out there. There's videos tying him to certain people, and it just seems like everything that's going on is so scripted right now, and it's insanity. Like I said, it's going to be interesting to see a documentary done on some of this shit someday, because it's pretty appalling. So yes. I am going to go through a few charts here, and then I'm going to leave it open for you guys to ask any questions that you have on any projects that you'd like me to take a look at. This is a good day to take a look at any crypto tokens you'd like to look at, because, again, we have a weekly close and a 2-weekly close. Next week, we got a monthly close on the 30th, on Friday. Shit. Well, I should be here on Friday the 30th. Friday the 30th is going to be important because that's going to be a monthly close. I'm going to be doing a little bit of, as I'm sure everyone is for the most part, I do have some summer travels coming up here, particularly in July. I also am anticipating a little bit of corporate travel in August. So I'm going to do my best to make sure that I'm still coming out here. I know the monthly close I really want to be here for, so I will try to make it work on Friday the 30th to do a live stream, because I really would like to assess the monthly closes with you guys. If I'm not here on Friday the 30th, then we will see what we can do to make it work over the weekend. We'll see what we can do. But that's a week and a half away, so let's not jump ahead. But we have a weekly close as well as a two-week candlestick close. So let's kind of assess what's going on here. So before we get into some of these higher time frames, I just wanted to assess more on the smaller time frames here, lower time frames. What's going on with the price action? This is actually the daily. The one thing I wanted to point out with you here, you can see we're sort of in this falling channel here. You can't really chart out a falling wedge on the 1 day. It's more on the 2 and 3 day. We're in this falling channel. The other thing I'd like to point out to you, see if we have any bullish divergence. So yeah, there's bullish divergence here. But the other thing is we have this other gray. See this gray descending line? We've popped up above that. Something I was monitoring. This goes back from the 29th of May, okay, all the way down to here. But the other important thing, if you're looking at a daily chart, what shouldn't surprise you is now that we broke, you see right here, we broke below the 50 simple moving average. Because we broke below the 50 simple moving average, it's going to act as resistance, right? See how we keep coming up and we're banging our head against it? The good news is we've come up on multiple retests at this point, so in theory it should be weaker now that we've come up and we've hit it a few times. What we want to see on the daily and what you want to watch for is price to close above this 50 simple moving average, which really you're looking for price to get over 27,000. Now I've indicated roughly, and I rounded the figure to make it simple. I'm not going to really start getting more excited until I see price closing over 28,500. How did I come up with that? This high here, you see this prior bounce high, this lower high. This high is lower than this one and lower than this one. Once we start getting above this guy's at 28,452. Okay, so that's why I just said 28,500 to make it simple. So that's what we're looking at on the daily. Let's go into the 12-hour real quick. Ignore the lines for the time being because I drew them on the daily. Now, the important thing to keep in mind with the 12-hour chart, you know we've assessed the 12-hour chart, has a lot of historical significance. It's good to see that what's happening right now is, and this is really what we wanted to see. This is what I was talking about when we started to break down below the 200 simple moving average. Thumbs up for everyone new tuning in. I appreciate the support. And if you can't see, by the way, if you can't see the thumbs up button, you have to hide the comments, and then you'll see that you can click the thumbs up. But it is important to hit the thumbs up. I appreciate the support because that's going to ensure that more people see this as they're searching for crypto content. What is nice to see is the price action get right back up to this 50 simple moving average. What that will prevent, so long as we can stay up in this price area here, what that's going to prevent is the 50 from dipping, continuing to go lower, right? This 50 simple moving average is going to flatten and begin to curl up so long as price maintains itself in this area and continues to push up to the 200. The other thing that's really good to see on the 12-hour that's encouraging, the 200 simple moving average has continued to move up. You see that? It's not curling down. So the sooner we can start pressing back above the 200 simple moving average, which is at like 27,500, the better it is for us. So if I had to indicate to you kind of two price levels I would watch for in the shorter term here this week, okay, this week, it would be 27,500 and 28,500. Those are kind of the two main price levels I'd really like to see us get above this week. Now, let's zoom out. Let's look at these higher time frames, okay? We can look at the weekly. Now we have a new weekly candlestick. We're also going to take a look at the 2-week. You can see here the inverse head and shoulders, and I guess the technical way to draw this is you'd actually, draw the shoulder like this. I think it's best, you can best see the pattern the way I have it presented here. But this is an inverse head and shoulders. This is a falling wedge that is still valid, okay? And you can see, even though we closed the week below the 200 simple moving average, the thing I would, again, there may be content out there that will fear, there's perhaps, I haven't looked, but I would venture to say, there's some fear porn perhaps out there, whether it's on Twitter or YouTube. Oh, we got 2 weekly closes below the 200. This is devastating. No, it's not, okay? First off, price is tight. It is very tight with the 200 simple moving average, okay? It hasn't done one of these things, okay? So it's stayed very tight in this region. The other thing to keep in mind, even though we're below the 200 simple moving average, there's a broader pattern that is present here. This bullish pattern, this inverse head and shoulders, is on a macro time frame. It's on a weekly, and it has a higher statistical likelihood of playing out to the upside, okay? And all we've done here in this falling wedge is we've backtested the top of the shoulder line. That's all we've done. And I've reiterated this point several times last week, okay? So that's all we've done. There's nothing alarming going on. If we look at the price indicators, you can see we have a cross down on the MACD, which is not good to see, but it's not a drastic cross down. Now, what we want to see over the course of these next couple weeks, we want to see price action begin to push up, okay? If price action begins to push up towards 30,000 and above, what you will see in the coming 2 weeks, this will flatten and begin to curl up. So this will be, as they term, a nothing burger, okay? Nothing to get concerned about. The RSI, you will see as we continue to go through a lot of these charts, whether we're looking at a weekly or we're looking at a 2-week chart, and whatever token we're looking at, Ethereum or Bitcoin, or we're looking at the total market cap, the 51 is a key area on the RSI. So that's a level that you really want to keep in mind as you're assessing a lot of these weekly and 2-week charts. You can see right now, this is good to see, the RSI is at 54. Very good to see, all right? So we're well above 50. Not well above, but a moderate amount above. Now, the stochastic RSI, let's talk about momentum, right? Momentum can be seen in the RSI, but momentum can also be seen on the stochastic RSI. The stochastic RSI has flattened, which is good to see, but we're below 20. We need momentum to kick up in this thing. In the coming 1 to 2 weeks, if we can see that significant push up, okay, towards 30,000 and above, which is the camp I am in, if we start to see that push up in the next couple weeks here, this stochastic RSI is going to cross positive and get above 20. That's what we need to see. We need to see the stochastic RSI get above 20. 20 is what is known as the trigger line, okay? So right now we're sitting at 6. Let's go to the 2-week chart. If we go to the 2-week chart, once again, I want to point to the price indicators real quick before, nothing really to point on the price indicators or on the price action. Let's actually focus on the price indicators, do the reverse of what we commonly do. Now look at the MACD, what's going on here. You can see momentum is starting to fade off, right? But the other thing I would point out to you is look at how close this MACD is to getting above 0. We have a positive cross. We just need to poke our head above 0 and start continuing to push up, right? So in this next candlestick, if these next 2 weeks come in bullish, as I am leaning towards, and as I keep indicating, June's going to be a big bullish month for us. If we do get a 2-week bullish candlestick and we get something that prints up towards 35,000 or 33,000, whatever the case is, that you will see when this candlestick prints, the MACD is going to be above 0, which is very, very bullish. If you go back in the history of time, anytime we've been above 0 on the MACD, okay, you can see what's happened here. We got above here, okay. It's very, very bullish on a 2-week chart when you can get that MACD above 0. Now, how about the RSI? We spent a bit of time talking about the RSI on the weekly, right, and what to watch for. Look at the RSI. We're at 51. Very good. We want to maintain that level in the 2-week chart above 50. Good to see, all right? Stochastic RSI, even though we've crossed a little negative here, you can see, look at the bottom left corner of your screen there. You see the 83 is under the 85, 86, okay? So while that's not bullish, the fact that they're so close together and the fact that it's above 20, that's good, all right? That's a good sign because momentum hasn't died off. It's just petered a little bit. So there's plenty of opportunity here that if we print a bullish candlestick to close the month of June out on this 2-weekly candlestick, you're going to get a positive cross on the MACD. You're going to have the RSI pushing up towards the mid to high 50s, depending how price closes, and you're going to get a positive cross on the stochastic RSI. So very, very good things on the high time frame, guys. This is why it is important, okay? Zooming out on these higher time frames and being able to properly interpret the data is very critical to the success, your success in the markets, Because if all you're doing is you're paying attention to the day-to-day and you're seeing this, very easy to get weeded out. Very easy to get weeded out. I've been in your shoes. If you find yourself to be more of an emotional investor, again, I've been in your shoes, so I can sympathize feeling that way, but I'm just trying to just help steer you guys in the right direction. So I'm gonna speak to Ethereum, then I'm gonna get to some of your comments here I see dropping. Feel free, if you guys have a project or two, I would be happy to chart them in the live TA Q&A. Okay, so this is Ethereum. This is on the weekly. Let's focus actually on price indicators for a moment. You can see the RSI is just under 50, right? 49.77. I'd like to see in this next coming week or two for this RSI to start definitively pushing above 50. Stochastic RSI, momentum has faded off big time. We're at practically zero. We need this thing to pick up, get above 20 and get a positive cross. MACD, same thing I would say for Bitcoin. There's a cross down here, but nothing overly concerning. We want to see this week for price to stabilize and begin to push up. That will result in the MACD crossing and leveling out and crossing above, okay? Now, for now, we're basically in between this zone. We're really in between 1680 and 1800, right? And I spoke to the fact that because we broke below 1800 and we were so close to these moving averages on Ethereum, the 50 and the 200, there was a much higher likelihood that we would touch this area. We haven't so far. Now, again, I didn't say that we would, with 100% probability, I never say those words with certainty, touch the moving average. All I'm attempting to convey to you is that there's a higher statistical likelihood that we would hit this moving average, given that we broke a key area of support at 1800, okay? So far, so good. We're just gravitating in this range. As long as Ethereum doesn't significantly break down below 1500, I don't really give two shits if we see a wick in the $1,500 area. What I don't want to see are closes below here. That's all I don't want to see on Ethereum. Besides that, the fact we're chipping and chopping around here, no concerns. I'm not concerned one bit. If you go to the 2-week, let's see what we have on the 2-week. Ignore the moving average. Let's just hide it, actually, so it's not distracting. All right, so if we go to the price indicators, again, the MACD is very close. Even though the histogram's kind of fading off, there's a little bit of shift in momentum here where we're sort of fading off. Good to see that we're very close to this zero trigger line. RSI is just under 50 at 49, and the stochastic RSI, similar comments as Bitcoin. 78 is under 87, but we're still high, and we don't have a steep decline here. So if we can get some positive momentum in this next week or two, we're going to get a positive cross on the stochastic RSI. Let me see what comments we got here. Yes, I would be happy to chart render. What's up, brother? Holla back, Jorge in the house. What's up, brother? Good evening, Rashid. Glad to see you here. A very consistent, loyal follower, subscriber. All right, let's get into some of these total market caps, and I'm going to get back to render. We can certainly take a look at that. Total market cap. Ooh, got some thunderstorms going on here in South Florida. I don't know if you can hear that. It's been storming all week. That's one of the other things that makes it easy to stay in on the weekend and not really do much is when the weather is just kind of, it's cloudy and it's rainy. I don't even feel like going out and doing anything. I'd rather just stay home and kind of geek out. So anyway, I've pointed to this region here. If we're just looking at price action, you can see there is a region. Maybe I can better display it here. You can see that it's this region right here, okay? When we've been above it, it has acted as support. When we've been below it, it has acted as resistance. And right now, we're just like right in this area, okay? We're basically poking our head on this is the total cryptocurrency market cap. This is on a 2-week, I apologize. 2-week time frame, total cryptocurrency market cap, okay? Right now, we're poking our head right above 1 trillion, okay? And really, to make some definitive progress here, we need to see about a 15 to 20% gain in total market capitalization. Now, the thing that's going to drive that is Bitcoin and Ethereum. So once, I mean, really the way to think of it is once you really start to see Bitcoin and Ethereum, okay, you'll also start to gain too, but once you really start to see Bitcoin and Ethereum appreciate in value from current price levels around 15 to 20%, you should start to see total market cap, okay? You should see us poke above this 117 level. That's good. Once we get a candle weekly close up in this area, that will be solid progress. And there should be some more significant upside shortly there to follow. So we'll keep an eye on that. Now, this is a 2-week. We're going to take a look at the price indicators. Again, what I've marked here, again, MACD kind of fading off. We're close to zero. It's going to take a couple candlesticks before we can push up. But again, you can see that in the past, when we've gotten these positive crosses above zero here, okay, this was the resulting move. Positive cross here. This was the resulting move. I mean, we can go back in time, but cross back here and you can see, I mean, we had monumental move. But in any event, the other thing to watch for here beyond the MACD, okay, we also want to watch this RSI. You can see I have this 50 level drawn. We're sitting at 47. We have a little bit of work here, all right? This is on the 2-week candlestick. Once we can get a 2-week candlestick close above 50 on the RSI, very bullish. RSI, similar story as Bitcoin and Ethereum. And guys, I've reiterated this before, but keep in mind, the total cryptocurrency market cap, you got to ask yourself, how should we expect this chart to look? Like if you're really understanding the market and how it works and what these charts represent, that's the best way to put it. If you really understand what it is that I'm charting for you and things are making sense, if I told you, and this is actually a fact, at this point right now, Ethereum and Bitcoin make up 70%. It might be 71 or 72, but 70% of the entire cryptocurrency market cap. All right. Well, if Bitcoin and Ethereum comprise over 2/3 of the entire market, wouldn't you expect that when we chart the entire market, that this chart will resemble in large part what we're seeing in Bitcoin and Ethereum? The answer is yes. Okay. That should make sense to you guys. So it's, you know, very similar things we're seeing here. Total 2. Now, in this case, what's going on is you're stripping out Bitcoin. So we're just looking at Ethereum and all the altcoins charted on one chart, okay? I don't know the percentage that Ethereum makes up. Boy, I don't know. What is Ethereum dominance? That's a good, let's take a look at that together. What is Ethereum dominance? I'm going to guess. Let me see. Ethereum dominance, if Bitcoin is, boy, this is going to be some quick, rough math off the top of my head. This is testing me right now. If Bitcoin makes up, what does Bitcoin make up? 49? Bitcoin makes up 50% practically. So Ethereum makes up 20%. You strip out the 50%. I'll say 45%. 45%. 20%. Oh, well, this is dominance. Okay, well, this is, of course it's 20%, but I want to know of the altcoins. Can you do minus BTC.dominance? Oh, well, actually, it would be BTC dominance minus. No, never mind. This is getting too technical. I wanted to look at Ethereum's. How would I do that, actually? I want to know how to chart that out. Anyway, I wanted to look at Ethereum's dominance as a percentage of all the altcoins. So you would strip out, you would take a look at total 2, and then you would just take Ethereum's. I'm determined. I can do this. Fuck that. So let's say Coinbase, Ethereum, USD divided by. Oh, not USD. You need market cap though. God damn it. How would you do this? Ethereum market cap. No. Sorry guys, I feel like I'm wasting your time. We're not gonna take a look at this any further. I'm gonna figure this out later. But anyway, I wanted to look at what Ethereum's. Well, anyway, the point of what I'm trying to say here, okay, well, I'm going off on a side tangent here. This is what happens when you're analytically minded. You want to figure these things out on the fly, and I can't figure out how the hell to do it. But the way you would do it is, anyway, this is Total 2. Total 2 is comprised of all the altcoins. So strip out Bitcoin and you're left with Ethereum and all the altcoins, right? So what I was trying to say is if we took Ethereum's market cap and we divided it by the total altcoin market cap, or the other way to state that is the total alt cap minus Bitcoin market cap, you would get Ethereum's share of this market, and I would venture to say it's like 45%. But in any event, maybe even 50%. But in any event, no, 40%, 45%. But in any event, this chart in many ways is going to resemble Ethereum because it's heavily weighted towards Ethereum is where I was going with that. So if we kind of evaluate very similarly, you can see there's this horizontal area here, okay? This zone, anytime we've been below it, it's been resistance. Anytime we've been above it, it's been support. You can see we're below it right now. So we really need, you're talking about, we need to see a push up. We need to really see a push up in alts in total of about 38%. Once we can get up into this area, and we can get a candle body close in the 2-week, that's when we should start making significant moves up. So that's what's to keep an eye on. But let's take a look at the relative health. Now that we have a 2-week candlestick, let's just focus on the 2-week. You can see we still have a little bit of ways to go to get across up here. Again, it makes sense given the fact that Bitcoin is going to run harder in the beginning versus your altcoins. So it makes sense that the total market cap is looking a little bit more healthy and looks closer to a breakout versus Total 2. Total 2, it's going to take a little bit because it's going to have time to catch up, right? It needs time to catch up. 50, we still have ways to go on the RSI here. We're sitting at 43 to push above 50. MACD has ways to go. RSI, you know, we're still 59 under 71, so we need some momentum to flatten this thing out and begin to cross up, but really, we need that 38% appreciation upside to get up into this area, but nothing has really changed since the last time we looked at this, and nothing that the weekly, let's look at the price indicators here. Yeah, we need this MACD. We need some, look at the MACD here. This is, and you can see the momentum's very low because the stochastic RSI is at a half, 0.5, okay? What I would point out on the weekly, you can see we're crossing down now. This week on Total 2, I want to see some decent relief here because I want this MACD to flatten. I want it to flatten, and by the following week or maybe 2 weeks later or whatever the case is, I want to see a positive cross. Give it a couple weeks, but I want to see at least this thing flatten out, okay? So that MACD is what I would be, the price indicator I would be most focused on, along with the stochastic RSI. We need that thing to pick up and get over 20. Bitcoin dominance. Yeah, so this is important. Pay attention to what I'm going to share with you on Bitcoin dominance. I was assessing this before we went live here. Before we went live, me, myself, and I. Before I went live, there's nobody else here. Trust me, just me, myself, and I. Me in my head. Anyway, where was I going? Thank God, because I do work remote. Thank God I do get out and go to the gym every day and I see people and, you know, have that human interaction. Because if I was home all day and I literally did not see another human being, drive me fucking nuts. All right, now let's get into the chart. This is Bitcoin dominance. And as you can see, I had spoken about this last week. We've gotten above this line here. It's now acting as support. We're going to call it 49%. We're sitting close to 50%. Now, what I've spoken about, now that we've closed a week, and we're on the weekly right now, now that we've closed a week above 49%, it has significantly increased the probability. It would also sort of rhyme with what we've seen in the past, where we saw one more flush up before a flush down. For me, it has significantly increased the probability that you will see Bitcoin dominance ultimately top out and hit a level somewhere between this next area of price confluence between 53 and 58%. So it would not shock me one bit, and at this point I'm expecting it, to be honest with you. Now that we've closed above this area, I'm expecting some sort of swoop up here and then a swift movement down. I've already told you, once we come back down to this area at 39%, guys, we've hit this way too many times, all right? This is going to break, and this is what's going to, once we actually break the 39%, that is what is going to trigger a much larger run in altcoins. That is what you want to watch for, okay? It's not this move down. It's not this move down. It's once we break the 39% and start to come down to all-time lows, and then eventually break it and start going down much lower, which is what I still believe is going to happen, okay? Another key important point I wanted to point out on Bitcoin dominance, very important that you understand what I'm communicating here. On the weekly, okay, just going based off history, see how RSI tops up in this area? There is a zone on the RSI we're getting very close to, and it's between 72.5, we're going to call it, 72.5, and 77.5. We're sitting at 71. Now, the RSI has significantly, you can see it was it's pinged up in this area here. You see that? We are at 71, and we are at a point, once we get up into this area, which I suspect will happen with the flush up here, once we get up to 72.5 and 77.5, it's not just the price once we get in this area that's telling us most likely we're going to top. It's also the price indicators that historically are telling us it's overheated, okay? This is what I'm watching for in the coming weeks. So it'll be very interesting to see if that does indeed play out. Let's just focus on the weekly and not even look at the 2 week. Last chart for crypto, I wanted to take, well, this isn't crypto, this is the DXY. You can see the DXY, not much has changed. We want the DXY, the dollar index, to be weak. Fun fact, by the way. Do you know what the DXY is? It's measuring the strength of the dollar currency, the fiat currency, relative to other currencies. So food for thought. As this is going up, it's expressing strength relative to the other currencies. As it's moving down, it's expressing weakness relative to the other currencies. But I wouldn't make too much out of the fact of this thing going up or down and that telling you how strong other currencies are around the world. There aren't any quote-unquote strong currencies around the world, ladies and gentlemen. They've all been debased, devalued, and there's, I guess the way you could look at it is the United States is best positioned at the moment in terms of having the best of the worst currencies, the best of the bad currencies, but they've all been debased, devalued, and there's lots of inflation everywhere. So don't let this fool you that if we're expressing strength in the dollar, it means, or excuse me, don't let it fool you if we're declining in the dollar, that other currencies are actually strong. It just means they're stronger relative to the dollar, but they're all steaming piles of shit. Okay, that is my view. Think about that. Anyway, we have descending resistance here. This is on the weekly. We're below the 50 simple moving average. I've spoken to the fact that this should act as resistance since we're now below it. I did not expect the DXY to push anywhere above the 105 to 106 area. You can see we pushed up to just about 106 here since we've been declining. It also looks like, now that I'm looking at this, it also looks like beyond the head and shoulders pattern that we took a look at, it also looks like there could be a descending triangle here. Now, again, we want weakness here because historically what that means is if there's weakness in the DXY, that means there's strength in equities historically. Oh, yeah, bear pennant / descending triangles. And there's strength in equities in crypto, right? Look at what we're looking at here. Okay? This is a flag pole, and this is a pennant. This is also a descending triangle. Now, the way you measure that, if you want to measure the distance down, let's have a fun conversation about where I think the dollar realistically will go once it bottoms out. Right about there. So, just about like that. So that's how you measure it from the top to the bottom of the base. And that would take us all the way down to 88. So what do I think is realistic? Of course, there's a trend line all the way down here on the DXY if we really plummeted in value. Going back to 2008, you can see there's an upwards trend line if we fell all the way down here to the low 80s. I don't think that's going to happen, but certainly a possibility. Where do I think the DXY is going to bottom out? I think that the DXY is going to bottom out anywhere between this huge green area here. Okay, anywhere between 95 to 89. And the target actually for the descending, the bear pennant here, it actually does put us at 88, 89. So it'll be interesting to see if we go that low on the DXY. You heard it first. You heard it here first, folks. The DXY bear pull. I don't think anybody else has it. I haven't seen anything about this. This is a bear pennant. This is the first time I've really assessed it to look like this now that I'm looking at this. Yeah, and the technical target is all the way down at 88, 89. You heard it here first. So it'll be interesting to see if that plays out. Before we look at the S&P and NASDAQ, I know there was a question on render. Let's see what other comments we have here. Can you chart flare? Jorge, I don't think you want me to chart flare. There's nothing that I could update you. I want a bag, but I don't see how flare doesn't go under a penny. Jorge, I don't think, well, we can take a look at it, I guess. That thing has been a dumpster fire. It's been rough. I do plan on putting an updated video at some point out on flare when it makes sense. You know, when I look back at that video I put out, I have a video out there on flare. Everything that I, based on the information that was available to me, I went back and watched the video again. Very sensical video, very logical. It fucking fell apart. And I know there were a lot of shenanigans. You can look into it when the airdrop took place. I'll just leave it up to you. I was very, 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 you can go back to my tweets. I don't know how many times I can say very, very critical of Hugo. Filson, whatever the hell his name is. And the Flare team for delaying the airdrop for so long. Extremely critical. But I put those emotions aside and I evaluated whatever chart data I had. And I think I still stand by the video I put out there. It was still very logical in nature. It wasn't hopium. But that damn thing fell apart. And it's been a dumpster fire ever since. So we'll have to see how it recovers. But I will say, I do own a fat stack of Flare. I received a large airdrop because I had a lot of XRP at the time of the airdrop. And I have all of it staked and wrapped on Bifrost. Or Bitfrost, now I forget. Bitfrost, Bifrost. That wallet there, very easy to do it. You just send your Flare over there and you just delegate it and wrap it. It was the easiest process, and I'm getting my monthly distributions and I'm getting staking rewards. So, for me on Flare, I'll have to assess when the market appreciates where it's at. I will say, now that we're talking about Flare, I will say Flare for me is a bonus if that thing appreciates to some significant value down the road. So when I evaluate my investment portfolio, and if things, at least go to the minimum of what I think is possible, I'm fine. I'll be completely fine. I don't need the Flare airdrop to have a successful outcome at the top of the next run here. It's a bonus, right? So the way I look at it is, for me, because if I continue, here's the thing, if I continue to wrap it and delegate it, I'm going to get a monumental amount of Flare. So the thing I'm going to assess at that time frame is, how much have we really appreciated in value? Is this thing at 30, 40, 50, 60, 70 cents? If so, I will definitely consider selling a chunk of my Flare. If not, and it really is just it's a huge underperformer and it's not doing well, I'm not going to sell anything. I'm just going to keep it staked and wrapped. So, okay. If you get time, can you cast your eye over DMTR? All right, yeah, absolutely, Nick. Glad to see. Nick, I don't recall you being in here. I appreciate you if you're a new subscriber. We can take a look. I'm up 20x, you fool. DMTR dead. Influencers rugged. Uh-oh. Play nice. Play nice. Come on, guys. Play nice. Play nice. Play nice. Anyone in this live stream is not a part of the XRP army. They are part of the XRP community. There's a big difference. At least the way I view it. XRP Army, and you know, it's funny because in Brad Garlinghouse's video that he put out, he referred to the XRP Army, not the XRP community. But the way I've thought of the XRP Army for a long time are the maximalists, and I am not a maximalist. The XRP community I view as people that are supporters of the project, but I don't view them as maximalists. I could be wrong. That's just the way I view it. But let's fucking go, Josh. All right, you know what? You guys have asked me for a few different tokens here, and before we get into the S&P and the NASDAQ, and you know, if we don't have time to cover them, we can cover them tomorrow because we'll have a days of price action. Punchline, if we don't get to the S&P and NASDAQ, they closed very bullish last week, all right? But we'll get to them probably tomorrow. All right, I don't have them. MDT, we might cover this one tomorrow. I had tweeted out I established a position here. If it gets in the orange box, I'm going to increase my position, but I'll save that conversation for tomorrow. Render. I don't know if there's enough price data here. There is. Render is doing quite nice. Now, I do see something interesting here. Is there a rising wedge? One thing I would be careful for, just right off the bat, I'm just telling you what jumps out to me. Again, I don't hold this project. I know there's been a lot of hype around it. I'm just going to tell you what I see. It doesn't need to play out, right? I see a rising wedge, which is a bearish pattern. So typically when you get a rising wedge here, coils up like this, and then it tends to break down before it begins. It can break back up, but there's typically a breakdown. Now, that's what I see. That's the first thing that grabbed my attention about this chart. So I see a potential rising wedge. So caution there. That's the first thing I would say. But now let's take a look at what else is going on here. This is on a 3-day. This is Renda, ticker symbol RNDR, Render. That is me. I can't roll my R's. You can ask any Latina or Hispanic I've ever dated. I cannot roll my R's. Whenever I have attempted to roll my R's, I sound like a complete fool. But I own it, I own it. Like, I know what I'm good at, and I know what I'm not good at. I'm good at a lot of things. We'll just keep it at that. No, I know what I'm good at, and I know what I'm not good at. We'll just keep it at that. We're drawing out some areas of resistance here. In terms of the price indicators, I like where the RSI is at. It's at 51. By the way, stochastic RSI, check that out. Okay. I like what I'm seeing on the stochastic RSI. We're getting a positive cross. It's starting to look like it wants to get back above 20. Very, very good. So that is a bullish signal. The MACD, we need to see this thing flatten and begin to curl back up. Now, so I like what I see on the RSI and the stochastic RSI. MACD, we got a little work to do. But let's look at major areas of resistance that I would point to here. Obviously point to that swing high there. I'd actually, even though it wicked there, I see more, I lean towards putting it more in this area. I see more price confluence right around there. So it might be above the wick, yeah. So in terms of resistance, Jorge, what I would point to, was it Jorge that asked this question? Wait, who the hell asked this question? No, it wasn't Jorge. I forget who asked this question. Someone asked the question on Render. Miroslav, yes. So in terms of areas of resistance, I would say that $2.11 followed by, if I got to get technical, there's another area right here. I would say $2.11 followed by $2.40, $2.67, and then $3. $3 is a psychological level. If you guys have followed me for a long time, not even for a long time, any even dollar level, $1, $2, $3, $10, whatever the case, they're all psychological levels, right? So $3 is not surprising. Now, what about areas of support? One of the things before I draw areas of support that is very bullish on this chart, despite the rising wedge, which is bearish, okay? You shouldn't just draw out a rising wedge and definitively say, well, there's a rising wedge, I think, present, so this thing is bearish. No, that's not what you do. It's at least a caution flag. I see a rising wedge, caution flag. But I will tell you what, though. What I love to see in this chart is we had a parabolic price movement up and we didn't dump, right? We did not dump afterwards. What we've done is we've continued to base. We've been building these higher lows, right? And we've been building these higher highs. That's very bullish, guys, all right? So very good to see. Anyway, areas of support. I like an area right there at the candle body. You know, I don't know if you notice this, but a lot of times, actually draw it right there. I don't know if you notice this, but a lot of times, I will opt to draw resistance or support when it interacts with the candle bodies versus the wicks. I think wicks, it's important to draw areas of price confluence at price wicks because they're an expression of volatility. It couldn't get above somewhere or couldn't go below somewhere. But the candle bodies, if you get a lot of interaction with the candle bodies, that to me represents more significance. So oftentimes you will see that in my charting. It's just a personal preference and what I believe in. Another area, oh, that's a clear signal right there. So here are your two main areas, Miroslav, on areas, and I'm sorry if I butchered your name. You know, I try my best, right? People, you know, oh, I almost said my first name. People, that's funny. I almost just blurted out my first name. People even butcher my first name. And I think my first name is the easiest name to pronounce, but some people look, no, I'm like, that's not how you pronounce that, but sure, you can pronounce it that way. Sure, go for it. There's an area of support right between $1.78 and $1.63. Okay, so that's the area I want to see hold. Real quick. Okay, so MACD on the daily looks like it wants to cross up. RSI, I was checking out this RSI here. RSI is lower than it was over here. All right. Yeah, the only thing that's really a caution flag to me is the rising wedge. Besides that, you have your areas of support and resistance here, and it looks very healthy. So we'll have to see how this thing plays out. Very good question. I appreciate the comment, or appreciate the question. You're welcome, kind sir. Let's take a look at DMTR. I am not familiar with this project. Oh, wow. Well, we've had a recovery. Let's take a look at what this bad boy is. What is the... we're at 3.9 cents, huh? DMTR. So is this at like rank 400 or something? I'm just taking a stab in the dark here, like a 400 ranking market cap. What do we got? 688, there you go. I was going to say 500. All right. DMTR. So, the first thing I would point out with this chart, you know the song by AC/DC? I'm on a highway to hell. That's, I can't sing like that guy. That guy goes so shrill. This looks like a highway to hell right here. This is literally, this thing... This is what the highway to hell looks like from the AC/DC song. Okay? So, you know, I think you get it. It's pretty fucking ugly, right? When I see an ugly chart, I call it. Now, what is monumentally bullish is we broke out of that. Not only did we break out of it, the technical pattern I would say is present here is called busting a nut. DMTR busted a nut, all right? We went from, that's the technical term, by the way. We went from 0.27 cents all the way up to 6 cents and all the way up. We went up to 10 cents. We did like a 40x, a 45x. That's ridiculous. By the way, whoever asked this is Jorge. Jorge, if you own this thing and this, Jorge, if you bought this thing anywhere in here, fucking congratulations. You are BBC. I am not Mr. BBC. If you had the balls and you bought in here and you held it, you are the fucking BBC. I am not. Oh, no, wait. Was this Nick or was this... Oh, Nick, you bought it too? Nick and Jorge. Oh, no. Jorge was the one... Okay, Jorge was the one taking a shit on Nick. All right, so I'm losing track of people are fighting each other here. Let's all be nice. Love. Love makes the world go round, all right? So, Nick, if you... Okay, I bought at the end of November. Dude, you're the OG, brother. You bought right in here. You bought it like a half a cent. And if you rode this thing up to 10 cents and you made like a 20x, fucking congratulations. And even if you're at 4 cents, I mean, you still got an 8x there, brother. I mean, good work by you. So let's identify. This is a really interesting chart now that we've broken out, all right? Let's try to identify. The struggle with this chart is, as I stutter, the struggle with this chart is we had such a massive downside in price. This is literally a death spiral. In all seriousness, guys, this is what's known as a death spiral, okay? It looks horrendous, all right? So it's very hard to get really key areas of price confluence. This is a little rough, all right? The first area, let's talk about areas of resistance. We'll start there. So obviously 10 cents, I mean, it should be obvious to anyone looking at the chart. You know, you can see we wicked up there, and 10 cents is going to be a psychological level, okay? I know that we wicked. Look, our wick went up to 9.7 cents. Good job by you taking profits at 8 cents. Smart man. So, but I'm going to put it psychologically at 10 cents because it's close enough. Now, where else could we see areas of resistance? I'd say, man, this is a fucking hideous chart. Trying to look for the areas of the most price confluence. 16.5 cents. I mean, this thing looks like it can run any minute. So we're gonna really chart. Oh God, this is horrendous. There's some volume right there. I might get it on that candlestick. If I were you and you wanted to enter a trade again on this one, these are your areas of resistance for me, okay? I'm just charting. Like if I entered a trade, and we'll talk about areas of support. If I entered a trade on this, I'm just telling you what I would do. We're going to round this, all right? Again, I'm not offering any financial advice on this channel. I never will. I never have. I'm just telling you what I see in the chart, all right? Please, everyone, hear what I'm saying, all right? I'm just literally charting this thing and telling you what I see. So this is my zone of... This is what I would call, since we've gotten technical on this chart, this is my zone of get the fuck out. All right. This is my zone of get the fuck out. 10 cents to 33 cents. All right. 10 cents to 33 cents is get the fuck out. All right. That is my zone. Yeah. You get anything above that, you consider yourself lucky because this is an ugly ass looking chart. Now, what about areas of support? Well, I want to use a fib retracement tool here. I want to go from the bottom to the top. Let me quickly explain what I'm doing. We'll just do it roughly. It is very common for a lot of these assets to, once they make a large move up, it's very common for them to retrace to what are known as Fibonacci retracement levels. And there's a couple key ones that we can kind of focus on, okay? Now, especially for a volatile asset like this, you might look at this and you might say, hey, CBG, what's up, Track? Glad to see you in here, man. I was looking for you actually earlier. You might say, hey, CBG, we were all the way up at like 10 cents. This thing's at, 3.8 cents. This is an awesome opportunity to get in. We're down 62%. And I would say you haven't been here long. You haven't been here long. Now, maybe we just continue going up, but if it were me, if I was looking to establish a position, I would not be buying here. I would want a deeper retracement. And the area I would personally look for, and you'd say, oh, I'll never get this low. That's crazy. I like this wick right there. So I'll say right there. This pocket right here. Now, I'm being a little bit more aggressive in drawing it above the 0.618 because of the price wick here. But I'm saying anywhere between 1.3 cents all the way down to 0.58 cents. Okay? Again, you might say to me, that is impossible. Again, if you feel that way, welcome to crypto. And I'm not saying you're feeling that way, Nick. I'm making a general statement. So for me, where I would be very interested in price is if it came down anywhere in this area, okay? Because you're talking about the upside potential here. The risk to reward ratio is the way to phrase it. It would be very advantageous in my opinion. I'm not interested in anything up in this area here. Now, especially given that it's a low market cap, okay? Now, let's talk about other areas of support. Let's say you want to be a little bit more aggressive, okay? To each their own. I'm not here to hold your hand. I'm just here to show you what's in the chart. We're all, as I always say in my TA videos, we're all big boys and big girls. So with that being said, as I always say in the videos, right? So with that being said, I'll leave it up to you. There is another area of support here at 3.4 cents. There is another area of support at, we're going to call it 2.9 cents. And there's another area of, I mean, really, there's just so much volatility here. I would draw it right there. So there's really this other area. If you don't want to, you want to be more aggressive, go for it. I would go 3.3 or 3.4 all the way down to 2.3. You could certainly, you know, if you think there's less of a probability to dip down here, then at least I would suggest waiting for a dip down here before riding that thing further up. I hope that you found that helpful, Nick. Yeah, absolutely, man. I'm just reading the charts. I mean, I'm just telling you what I see in the charts. I never, and that's the thing. I never, I am by nature of who I am as a person, I am a very emotional person. I think you can see that come through in a lot of the videos. I'm very animated. But those animations and those emotions, they don't feed into how I'm assessing the charts. The charts are the charts, and I'm going to tell you exactly what I see. I'm not going to spew some shit to get clicks and tell you what you want to hear. That's not what I'm about. Well, Track, you know, you've been here for a bit, so you know that you know that, I mean, what is the title of the live stream? All in the charts, right? So as much as I can appreciate what you're saying, the point in time I'm at as an investor is that I realize that people need a narrative. They need a story to make sense of the charts, but the charts are the charts. The charts do not follow news. The news follows the charts. That is my view. Okay, so yes, ADA, we can take a look at it real quick. Yes, ADA, you know, look at Matic, right? I tried sharing on Twitter, as weak as it's been, if you actually zoom out, it's still making higher lows. So I understand it's been weaker, but there's nothing monumentally concerning about it. Yeah, so the thing, we actually just touched on this one. I don't think I really have anything new to add to it. When we touched on Cardano the other week, the thing that I did indicate that's more of a weaker, it speaks to the weakness in Cardano, as nice as this chart looks. Look, guys, this low here, this went lower than the low we experienced in December of 22. Okay, we hit a low of 22 cents. Wow. And here we went all the way down to 24. So, yeah, there's definitely a lot of weakness in this chart. We'll have to see how it plays out. Look, there is, I mean, I'm never going to bullshit you like I say. There's another area of support right here. I'm not telling you this thing can't completely fall apart, okay? I will tell you that because we broke down below all this area, right now, in my opinion, we're hanging out in no man's land. We're just hanging out here. There is a high probability, in my opinion, we could break down to 20 cents. A very high probability. And if we break 20 cents, do you know what the next area I'm looking at? Okay. Wow. Can't get off this fucking drawing. Can we just please, TradingView, cooperate? I am live on the YouTubes. I got people coming in from all over the world. All right. So the other area, I mean, there's an area there, but yeah, there's just not a lot of, I wouldn't even draw it there. Again, I go with candle bodies. This goddamn auto scale is getting on my nerves. I would draw it right there. So if we break down below 20 and a half cents, all right? God damn, this auto scale. If we break down below 20, you're talking about there is a huge gap between that and like 15 cents. And then there's a huge gap between 15 and 11. I'm not saying this to scare you. I'm not telling you Cardano's going to 15 or 11 cents. I'm just saying because we've broken market structure and we're below these key areas up here, it has significantly increased the probability. I'm not here to pull a Peter Brandt, okay? For those that know who Peter Brandt is, I'm not here when XRP started breaking down 2.5 years ago, putting out a chart and saying, oh, there's a lot of white space down here. You know, give a little bit of context. I'm not here to fear you guys, all right? I'm not here to do that stuff. But what I'm being a realist, though. Because we've broken market structure, number one, what I would say with Cardano is there is an increased risk and an increased probability that we could come all the way down to 20 and a half cents. Now, 20 cents is a psychological level. If we break 20 cents, especially on a candle body close, if we break 20 cents on a candle body close, in my opinion, there's a very high likelihood we're going to hit 15 cents. You break 15 cents, then you're talking about 11. All right, I'm not telling you what's going to happen. I'm just saying there's increased probability. But given that I'm expecting the rest of the market to continue churning up this year, I would say that breaking 20 cents to me seems unlikely, but it's certainly a possibility. What's up, Brendan? Glad to see you in the house. Holy shit, we've been doing this live stream for an hour. Guys, I appreciate your patience. I appreciate you tuning in. Did not think we were going for an hour now. I'm going to get my dinner together. I'm going to relax this evening. I do not have any plans. I'm just going to chill and relax. I'll probably be listening to a podcast, though. But, all right, guys, have a good evening. I will be back tomorrow. I'll be back all week. If you appreciate the content, make sure to share this video with at least one person. And until next time, spread awareness. Let's all carry the education forward. Good to see everyone. Take care, and I will see you tomorrow. Same bat time, same bat channel. All right. Man, that wasn't even funny. That was pretty lame. All right, guys, take care.